this head and shoulder formation. For example, with the shoulder here, the head here, and with the left shoulder here. But something we've definitely learned from history time and time again, and also going back to the previous ranges in February as well, in the Bitcoin price action, is that it's very hard to know exactly when the range is going to break. And the range is still the range until it's broken. And it's like that time when Bitcoin went from 6 to 3K. There's so many people calling for that 3K. But the problem is, by the time it actually happened, the sellers were just completely exhausted. And so that's just something to consider. And recently what happened is, we are in this huge, massive range, which started from 16th of March to the current price action. And of course we had that kind of scary wick here, which went down roughly 25.8K, just under 26K. We popped back up. Looking at the fixed range from all of this price action, you can see that initially we just deviated out of this kind of range here. Now we're back above. Question is, do we hold this value area low? And this is naturally in this range zone here is where most of the high volume transactions are. And this red line is the point of control. So this is around 21.8K. So far we're flirting with this value area low around 27.1 to 27.2K. And so we just have to really see if that holds. Of course, we have the next range below us to also be aware of, and just drawing the fixed range from this point to just before here. Of course, this was the region in which we had that USDC FUD and the bank Silvergate issues as well. And so for us to get back acceptance into this bottom range here, and of course we're in this range here, we really would have to definitely break below 24.2, 24.1. This is the value area high of this particular range. So far we are above that. You also have to be aware of this somewhat seemingly like a channel which has seemed to be forming recently. It's a downsloping channel. And we have 2 to 3 touch points here. And of course different people draw differently. But then you had touch point here, touch point here, touch point here. This seems to be somewhat of a deviation play. The question now is, do we get a push to the mid zone of this channel, or even the lower end of this channel, around 25.1K, 24.9K, and then get a push back up again? Or do we somewhat have a bounce here, perhaps a deviation play of this local high here, and then maybe we get a push back down? And so these are certain things as potential situations that I'm really looking at. And I always say that very often in your longevity in trading is very much dependent on how you deal with uncertainty. Market really could go in any direction. For example, you could literally just draw an Elliott wave, and this is just one I've drawn on top of my head. We had this impulse here back from March, so first impulse, second, 3, 4, 5. And what if this is just some kind of ABC correction, B, C, before another leg up to 34, 35K? And so that is just some food for thought as well. We also have to be aware of certain CME gaps that have also formed. We have a more recent one here between this 26.5 to 26.7K region. And CME gaps, whether you like them or love them, very often they can bite you in the ass exactly when you just decide to dismiss them. And so you can have a time exactly when it's going to be full, but it's just something to be aware of. And of course we have this other CME gap here between 29.1 to 29.5. That's something to be careful of as well. And then the one that we've just spoken a bit less about, which I think is definitely important to be aware of, is this one further up as well. And there's a CME gap also from May 2022 from 34.5 to 35K as well. And so it's not out of the realm of possibility that we do reclaim and recover the CME gaps, but the question is when. And this number keeps cropping up again. Perhaps we do get that rally in June or July before a brief pullback. That target of that CME gap in 34 to 35K also aligns with certain other things. So if you draw Fibonacci from the cycle top from last 2021 to current price action, the 382 Fibonacci is around 35, 36K. And so perhaps that is a potential region we eventually might tag, but perhaps we might get that pullback initially, or we could tag this first. And so very often it's just level by level. But looking at this, what you have to appreciate is that this whole year we've almost had 100% and actually just over 100% run up. And so we have had somewhat of a pullback, but it's not out of the realm of normality, right? So what are certain regions that we could pull back down to? Well, we do have certain trend lines. For example, if you draw a trend line like this, it goes all the way down potentially to 23.1, 24K roughly. But again, Bitcoin's movements are never perfect, legends, is it? No, it's never perfect. Sometimes there's a deviation play down like this, and just screwing people who limit longs too early, and then pushing back up. It's just never obvious. and certain confluences that we also want to look at as well. Looking at the weekly chart, I spoke about how there's this huge fair value gap, and so this is a huge green candle here, but when we actually went up in the weekly chart here, there's a huge gap here. So there's a wick here, and there's a wick here, and so the question is, do we get to fill that eventually? And so the complete recovery of this gap here would be roughly 22.5. In terms of more weekly levels, just under 27k around here was the weekly open. And then naturally the next key weekly level I'm interested in looking at is also 30.3k as well. And then question is, do we tag that? Perhaps. There is going to be a lot of stops here, and you can never know exactly the route it's going to take, right? So looking at certain other key levels, like monthly levels as well, we naturally have this 23.1k level, which is naturally the monthly open and close for several months. We formed this doji here as well, and the monthly open of this current recent month and was near 29.2, but this was also the quarterly open as well. And so these are key levels I'm looking at. I spoke about this a few times as well. This is like a much bigger shark harmonic. Harmonics are just essentially looking at geometric shapes, and very often they have a habit of filling. And so this is a bearish shark harmonic. It's hard to know if D is going to be the top, but so far it seems it's not under the realm of possibility. It is the top. But for this target, I expect at least 24.8k, 24.7 as a first target. What I'm essentially trying to say is that if we fall below 25.2, 25k, I don't think the stop is just 24.8k. I think we do get a move all the way down to 23.1, that key monthly level, and potentially that 22.5k region as well, to essentially fill in that gap that I showed earlier on the weekly chart. Just drawing certain fixed ranges in terms of volume, just seeing where most of the transactions are this whole year. And if you draw it all the way from this top one here, then you can see that how crucial 24.7, 24.8k is, and this number keeps cropping up again. And so if we do fall below that 24.8k zone, please appreciate this is a zone and not just a rigid number, then it's very likely you do get a move at least to that 22.5k, because this is a value area high of quite a long range we had. And in some sense, you could say that we're in two separate ranges. If you imagine this is one separate range like this, and this is another range above like this, and this has pretty much been this whole last 1 or 2 years of what we've been doing. And it'd be interesting that if we do eventually fall back below like this, perhaps this whole thing was just a deviation of this current range like this. And of course, you have to realize that there's obviously there's room for variation, and perhaps you get some kind of fake out like this, tricking people, and might go back up again. And so these are just all things I'm looking at. Looking at the weekly Gaussian channel, if you notice, we slightly ran the mid band of the 5-day Gaussian channel. The band is roughly at 25.6, but we only reached 25.8k roughly in this dump. And so the question is, next week, do we have some kind of a push down again to at least tag the mid zone before another push back up? Or do we completely just dump to the bottom band? Which, of course, won't happen in a straight line. But so far, really anything can happen. And if you notice, the upper band of this weekly Gaussian channel has slightly been sloping downwards as well. Looking at the 5-day Gaussian channel, we're still above it, which is good. And something that's a bit more bullish is that we have turned green now. Sometimes what happens in Bitcoin history is that you do get a pushback sometimes to the top of the 5-day Gaussian channel like this. So this is roughly around 24.8k. So we keep seeing that number crop up a lot. And the question is, do we then push back up to new highs, maybe 35k in the summer? That's a potential situation. Or do we just dump straight back down to the mid zone of the 5-day Gaussian channel, around 22.1? The common theme is that the market can go any direction right now. Overall in this market currently, and especially looking at the lower timeframes, anything can really happen. We could first of all potentially initially get another dump here and perhaps go to 26.6k, maybe take some liquidity from the stops here, and then have a push up to 28.1 or 27.6k again, and then see another new dump to 25k. Or we might get another push up again. So yesterday we had that false break of that recent local high here, if you notice here. And this false breakout happened, and then we went over this high here, then we came back down. So another potential situation that we could have, which is fairly likely as well, we might get another push up like this, maybe another push like this, maybe have another false breakout and come back in. And this could maybe stop at 27.6 or 28.1. And so in terms of a trading point of view, you can maybe go for a short here, or you might want to go for a short much further up. So I'm already in a hedge swing short from 29.9k, and I will be start building that up a bit more between 29.1 and 30.5, and that is if we get there. If we don't, it's completely fine. At least I've got some skin in the game. The next local resistance we have to also be aware of is around here, this 28.3k region. And so that might also be an appealing short trade if we have a deviation like this. And so that is just something also I'm looking at. But again, I don't want to limit orders. I want to react to price rather than try to predict price. So if I draw Fibonacci here from this recent local peak here, recent local low, we have now reached that 65618 Fibonacci, which I spoke about on Sunday. And so it's a nice confluence factor as well. And some of you also caught that nice long trade that I'm still in a long position from as a scalp long from 26.6k. I'm well in profit, and this was my original trade actually. So my trade entry was around 26.6. My stop loss is around 26.2, and so it's been a good trade so far. My target is 28.2, and at 27.6k, I took 30% of the profit, and so it's a risk-free trade. And I've also moved my stop loss to break even as well. But last Sunday, we explained how we had this recent dump, but then there were certain untapped points of controls that we expected to be tagged. And so I was explaining how I expected 27.4 to be tagged at least, because we had a huge amount of mass selling and leaving certain imbalances. And so it was naturally we expect a recovery of this kind of high volume area. And so we naturally recovered this. And so a lot of people exited as well, which is nice to see. Of course, looking at the wider market, we're in a very critical situation, and specifically SPX. S&P 500 index. We have this massive trend line coming from a very, very long time. And it just baffles me how we respect trend lines, just lines on a chart sometimes. As we had a wick here. Question now is, we initially had this wick here. The question is, do we flip this and then potentially have a run up to this weekly 4.3k level? Or is this some kind of massive fake out like this? And then do we fall back here and then come down to new lows? Potentially, of course, this 3750 ridge is quite key as well. And if I go into the lower time frames, I'm going to draw a fixed range from here to the recent local price action. It seems that we've been in a sideways range, but it does seem that this 4080 region is quite critical to hold. If we fall below here, then perhaps Bitcoin goes below 25k, 24k. So this is a key level. And of course, that correlation between stocks and crypto is on and off, but it's something to just be careful and take notice of. And so we're in a really dangerous situation, and we have to be carefully watching this as well. Looking at the Dixie, I spoke about this in the last session as well. We've been in this massive sloping channel from so many years, and we were finding a bit of support in that local end of this channel around here. And initially people thought we were going to break down to weekly, but I explained how I expected us to actually have a pump to at least 102.9. We slightly front ran that, but it was close enough, and this is the harmonic that I drew. And so I do expect a tag of 104 in the next 4 to 5 weeks eventually. Question is, does that really hurt risk on assets? And this is something to really watch as well. And the correlation with Dixie is very much inverse to risk on assets like crypto and higher time frames. And the Dixie is naturally a basket of fiat currencies, but includes the euro and the dollar. So you have to just watch these things as well. The total crypto market cap, and touching on from last time as well, I explained how 1.27 was a huge resistance, and then that we were going to get a back test of this key weekly level from this local high in August 2022. And so we got that retest once we broke down like this, but now we've broken back down here again. And this is why it's always important to always take positions of your spot positions when we have run-ups like this, so you can capitalize on dumps like this. Looking at Bitcoin dominance as well, I've been noticing as well for 2 years now, from May 2021, it's been below 50%. And so you would expect some kind of push back up to 52%, at least with the 50s. And so it's just a ticking time bomb, really. But perhaps we do get that push up to recover some of these imbalances that we left when we dumped here from April 2021. And so perhaps this next couple of months we get a tag to that much anticipated 50% at least. Looking at the gold chart, it does be somewhat reminiscent of 2018 price action. Seems that we might have some further push up, but maybe some kind of triple top, maybe before a leg back down. And this 1980-1923 is a key level as well. But overall, we are in a very critical situation. Anything can happen, and it's about not over-risking yourself. Looking at the long to short ratio of Bitcoin, this is essentially showing what proportion of the market is very net long. And it seemed that we initially had this high amount of net longs initially here from 14th of May, on the 15-minute chart, but then we had a recent dump. But now it seems the long-short ratio is creeping up again. And the open interest, so open interest is the opening of positions, and so it seems that this is creeping up a bit, but it's not that bad. But overall, in much higher time frames, retail are still net long, and so hopefully we get to see that coming down. And in a day trading point of view, we can appreciate how things change so often. So guys, these are just all the things that I'm looking at. Do check out my YouTube channel. This is where I post recordings and market updates, and really my passion for trading in crypto, and just investing in general. Thanks a lot guys for watching, and I'll catch you in a bit.